Hello, everyone. Welcome to our weekly East Bay Comps and Coffee. We get a chance to share some information that I know all of our clients are asking. We get so many questions, especially about the market conditions, what's going on with real estate. So I have my partner, Ryan, and my partner, Diana, here to share with you guys some great information.
How you doing?
Hey, guys. So thank you so much for tuning in. And if anyone has any questions, of course, put in the either, private message or put in the chat, and we're happy to answer any questions you guys have. So what we've done is we've prepared some information about basically some national statistics that, East Bay, Northern California tends to be pretty consistent with. And then we're going to share some local data as well. So let's look at those slides, Ryan, and we'll get right to it.
Yeah. All right, so let's go up to the first slide here. And Lisa, if you want to start us off with a very important one, actually.
Yeah, no, this is a great one. So we have been working with a company called Keeping Current Matters for, about 20 years. And I've always had great regard for them. They've always been very, very accurate. Back when the financial crisis happened back in 2008, 2006, we watched, Keeping Current Matters kept us abreast of what we could expect. And they were so accurate. So this is such an interesting statistic. So the first slide at the very top is what we showed back in April. When our market first shut down with COVID, everyone was a little bit of, concerned. And Steve Harney is the CEO of that company called Keeping Current Matters. He came on and showed us the top slide. And basically what he anticipated back in April was that our country was bound to see what we call a V recovery, which of course, during the shutdown, we saw a drop in our GDP, and our economy had, obviously suffered as more businesses were shut and people couldn't work. And if you look at the bottom graph, this is what's actually happened. So you see our, second quarter of 2020, we had a pretty significant decline, and we have had such a wonderful increase in recovery. And we're going to go through some more data with you. But, even though we are now, seeing some additional shutdowns across the country, some businesses, like for instance, travel and hospitality, restaurants are going to suffer more, which is very sad. And we hope that we can get those companies opened. But overall, we're seeing that still continual growth.
Yeah.
Yeah. I know you guys get clients asking you all the time, just like I do.
Yeah. Yeah. It's consistent. They want to know about the market and what's happening as far as their real estate. And it's a big investment when you buy a home. So, they want to be informed.
Yeah. Well, and back in April, May, again, when we were first seeing the initial shutdown with COVID, everyone was a little bit in anticipation of what we were likely to see. But, as we'll show you in these additional graphs, our country, we are definitely a country of fighters, and we're seeing a lot of that today. And the second slide, this is such an interesting, I love the data on this one, is what this shows is these are the businesses that have either started or have put in applications this year for new businesses. As a country, we are so innovative. People are always bucking it up. And if the current businesses are struggling, we're going to start again. And I love this one. I think that this is a great testament for the strength of our country.
Yeah, you had mentioned a local business.
Yeah. What were you going to say, Diana?
Oh, I was just going to say, this is just so amazing, because we were forced to be shelter in place and people were just, not giving up and, just trying to figure out, what can they do to, move forward.
Yeah, but what I love, and I was sharing this with Ryan and Diana yesterday when we were preparing for this webinar, is back in end of March, early April, right near my office, there was a brand new business that was just underway. They were just starting to renovate this location for their brand new salon. So a nail salon, hair salon. And I was so proud of them that during the midst of what would be considered a scary time for businesses, and they were not able to open like they planned, but they were busily working on the creation of their new company. And I told him, I'm so impressed with them. And now, of course, they're open, they're thriving. And I'm just so glad that they stuck with it and they had the faith that they could keep trying. So this is awesome. So I love this one. This is
That's great.
So let's look at that next slide.
Yeah, so this one shows the unemployment filing. So as you can see, beginning of shutdown, it peaked at 6.9. So this is nationwide. And then you can gradually see how it, has dramatically, reduced. So even as of, last month, the number of filings have definitely decreased.
Yeah.
So, people are getting back to work.
Yeah, exactly. And like we said, there are segments of our country where they are going to continue to see some issues, which we are all rallying to help our restaurants and to help our hotels and the travel industry. But overall, in general, people are doing better, and we are seeing a lot less unemployment filing. So this is good.
Yeah. Mm-hmm. And so this next one too kind of just supports that previous slide. But, when people started receiving, their unemployment, so it peaked in May, and then now again showing how it, dramatically has decreased, and as of October.
Yeah, it's good. I think that they said that, and this is showing this as well, that the unemployment, I think, even dipped down to like under 7%, which is obviously we have a lot of work to still do. But this is certainly, a testament to the fact that we're making progress for sure.
Yep.
Oh, okay, so this one too. This correlates obviously with, the unemployment filings. So in the beginning of the shutdown, a lot of banks, were giving the opportunity for homeowners, to go into forbearance because, they couldn't pay their mortgages. So it shows here in the beginning of that, May, just the amount of people that had, taken advantage of that forbearance. But it looks like now, looking now through October, people have started to make their payments or, arrange something with their banks so they can get back on track.
Yeah.
And Dinah, have you seen any of your clients, or have you heard about, and Lisa as well, people having to sell because of forbearance, or are they in a good situation after they have taken that forbearance?
I haven't heard any of my clients as of yet that had to sell, but definitely I have heard of a few that have taken advantage of it.
Yeah, me too. I have a few clients that in the very beginning of the shutdown, they called and asked, how do they apply for a forbearance? What do they do? So we help them with their mortgages. But yeah, I'm so grateful that most people that we know, at least clients that we have, even if they own a small business, they've been able to, hang in there and stay in their homes. So
yeah, that's a good thing.
Yeah, I'm so glad for that.
Yeah, so then, so this is a statement from Ivy Zellman. So she says that, the likelihood of us having a foreclosure crisis again is about 0%.
Yeah. Well, and I think, don't you think that, Diana, part of the reason for that is they were talking about how America, since the last time we had a crisis, back in 2008, the amount of, people that own, like they have a lot more equity in their homes today than what they had back then. I think that the amount of loan, if I heard correctly, the amount of mortgage in our country is down about 2/3 from where we were back then. So people they don't have to foreclose if they decide to sell their homes. They have the ability to do that.
Yeah, and I think they were also saying that buyers are putting a bigger down payment now versus before.
Yeah, and 50%. This is a statistic that we just heard in the last 2 weeks. 52% of all Americans who own homes all over our country own their homes free and clear. So obviously, parts of the country, California is a lot more expensive, but parts of the country where home values are more affordable, that's a huge amount of, people are making wiser decisions today. They're not using their homes as ATM like they maybe have done in the past. People have been smarter. Yeah. That's good.
And this one depicts the months of inventory nationwide. And as you can see, it's the last 12 months. So all the way back in October, it was 3.9 months of inventory. And for anybody that is unfamiliar with that term, that pretty much says, say in any given market, if there were no more homes to go for sale, it would take 3.9 months for all the homes to sell. Or in this case, as we're seeing in September of 2020 and October and November, is an extreme shortage of homes on the market. That months of inventory dropped to 2.7. And, Lisa was talking about this yesterday, probably even less than that. We're seeing homes fly off the market in less than 5 days for way over asking. It's really insane right now.
Yeah, this is a national statistic, of course, and we're going to show you some of our local statistics here in just a few minutes. Yeah, I think that, again, certain markets are driven by certain, characteristics drive certain markets. And so we in the Bay Area, especially in the suburban area of the East Bay, people are flocking to our market from the city, San Francisco, from the South Bay. Companies allowing the people to work from home even after COVID, works its way through, and we're all back open again. It sounds like people are going to work from home more, so it gives more options to come our way. So
yeah, exactly.
A much more heated market.
And this is a projected home appreciation of prices for next year. And as you can see, Zillow is out in front, and they have a little more robust projection of where we'll be. But CoreLogic is on the more conservative side. But the main picture of this slide is representing that a lot of these huge companies that are leading in the statistics are expecting us to have a pretty strong year next year as far as real estate.
Yeah, I think so. I think that it'll be market sensitive, but as a country, we're expected to see continual strength in the market for sure.
Yeah. And, we're supported by the tech industry. So that tech industry is still booming, and we're very thankful for that. And I know people around here are very thankful for that. So I think, it's very likely that we're going to have a good year next year.
I think so.
And Lisa, do you want to talk about this raising of the mortgage rates?
Yeah, so this is a really good one. Obviously people keep asking us, what is causing the market to be so heated here? How have we gone even in amidst of what we're going through as a country? And part of it is interest rates. So if you look at this, this year we're actually below 3% overall in our interest rates. And the Federal Reserve, the last time they met, they actually declared that they are not likely to substantially raise rates in the next few years, but they're projecting that we are going to see a slow, steady increase. So this is the advantage to a home buyer today, when you can get a 2.8% loan this year, maybe early next year. We're likely to see things creeping up. 3.3 is anticipated for next year, 3.6 to 22, and then on up to kind of back to what we might call more normal in the coming years. So this is such an advantage for a home buyer to take advantage, and home sellers too. It makes the active more makes the market more active, and buyers are more homes, so it's good for everyone. Yeah.
It's always nice to have multiple offers when you're selling your home.
I have to share too is when I bought my first home, I know this is going to totally date me, but when I first started in real estate was back in '86. I bought my first house about a year after I started real estate. I assumed an 11% FHA loan, and I thought 11%, it came down from
Wow.
So definitely under 3%.
That's crazy. Well, and as far as the demand that we're seeing in the Bay Area and across nationwide, this chart, or this graph rather, represents that everywhere in the country is experiencing a shortage and a high demand as far as people buying homes. The nationwide average right now is 21 days. The dark blue over here, Alaska, is pretty, the homes are flying off the market in up to 15 days. And the rest of the country, you're about 15 to 30 days on market, which is still a very quick time.
Yeah, and the only area, which is interesting, I guess maybe it's because people aren't able to travel to Hawaii as easily as they did because of COVID. They're seeing a longer market time. But yeah, the rest of the country is all pretty healthy across the board. It's interesting.
Mm-hmm. Yeah. And then this one here, this is showing pending sales. So as you mentioned, Lisa, rates are super low right now. So that's one of the reasons why, buyers are taking advantage. So, nationwide, you can see here just what a big increase, pending homes now.
Yeah.
Nationally.
Yeah, nationally. And we have realtor friends all over the country. I mean, they're telling us that they're experiencing similar, similar types of demand on the market. But yeah, this shows it's just crazy how the jump has been so intense this year.
Yeah, exactly.
Craziness. Yeah, but this is a really good one. People always ask us, buyers, of course, they think that maybe if they can find a distressed property, it might give them some sort of advantage. But this is showing, this is again a national statistic, and our data locally is very similar to this, is the amount of distressed properties on the market, either short sale or bank owned, is almost nothing. People have equity. They're able to sell their homes if they choose, rather than losing the foreclosure. So that's good news for our whole country, And this is a good one. This is crazy. Again, this is kind of a different view of a similar data. is year over year inventory levels. So if you look at, 19, of course, inventory did jump up, which we're going to give you some local statistics here in a minute. But this year, inventory levels across the entire country continuing to fall, just home availability. And then of course, interest rate demand being so strong, just really pushing the pressure on our market to grow in value.
Yeah. And, you spoke about mortgage rates and interest rates, and look, we were even last year, right? Last year in about the same time, they jumped up to about 4%. Now, during a pandemic, during already a shortage of inventory, we have the interest rates putting pressure on the market, with most people getting a 30-year fixed rate at 2.78%. This is, of course, situational, and every market may be a little different, but the majority nationwide, it's below 3%, which is insane.
Yeah. And so this one's interesting, because a lot of buyers believe, they need a high credit score, over 700 to, get a home. And as you can see here, that's not the case. There's loans out there. People are getting loans, and their scores are in the 600s. So there's definitely loans available out there for buyers right now that are looking to buy a home. So this is just very encouraging as well for buyers.
Yeah, I know. I've talked to so many buyers, for years, where they believe that if they don't have a 700 plus credit score, they can't qualify for a home. But, like you showed, Diana, there's about almost 20% of the market, the buyer market has under 700. So, and even under, even in the low sixes is possible, and in some cases. So, awesome.
Yeah, that's great.
And so, Lisa, this is nationwide. How is our, pocket of the Bay Area looking as far as our cities?
So as far as data is concerned, so let's go over the market. It's interesting, I'm going to go ahead and give you guys a whole East Bay overview, and then Ryan and Diana are going to break it down on some cities. We always consider the East Bay all the way from like Livermore, that Livermore pocket, Mountain House, a little bit, all the way through the 580 corridor, the 680 to 24, and then all the way down to Concord Clayton. So it's a pretty broad area. And Diana does a lot of work in that East County area as well, which Antioch, Pittsburgh, in that area. But it's just an interesting dynamic. If you were to look at the very bottom of the market, like back in, just to give you guys a little perspective, back in 2011 is when our market hit bottom. It was like October of 11, after we had the financial crisis. We kind of worked our way through that. In our East Bay, there were 2,400, over 2,400 active listings at one time, which was, obviously a glut of inventory caused the prices to fall. And there were only about 900 that were pending at that time. And then if you look at the statistics today, of course, things are greatly different. I went ahead and went back a year ago. I want to give you that first, and then I want to talk about today. So a year ago, November of 19, the market was actually pretty even. We had a little bit of a kind of a flat, 19 was kind of a flat market with a little bit higher interest rates. At that time in November of last year, there were 685 homes active on the market, and there were 693 pending. And that's in that entire East Bay. So Livermore to Clayton and that whole area in between. So still at that time, market pretty healthy, right? Active. We always gauge the market on, it's like, classic, the classic supply and demand, right? Inventory versus pending kind of gives you that gauge. Today, we actually have a little bit more active, which is surprising. There's 732 active listings on the market in that whole area. And there's 1,070 homes that are pending. So right now, and back in 2018, it was interesting. None of our cities had more pending than active. So for instance, like in Danville at that time, there were like 150 active listings and only about 75 pending. So the market was kind of just a little bit softer. But today, across the board, every city has more pending than active. So the demand is higher than the supply. And then there's a couple of statistics I want to share that people always ask us, they want to know. And this is overall our entire area. And of course, I'm going to let Diana and Ryan share. The average market time has really changed. So this time last year, average homes were on the market for 36 days on average. Right now, we're at 17. So of course, we've already seen that more demand, less inventory than what the demand is allowing. So 17 days. But this is one statistic that I thought was really good for everyone to know. Back last year, only 29% of the houses that sold did receive more than one offer. So 29%. In today's market, as of right now, 74% of the houses that are all pending have had more than one offer, and many of them are more than 5. So it's
that's crazy.
Crazy. And we've had, just this week, Ryan, you and I both wrote offers for buyers.
Mm-hmm.
4 offers.
Yeah, it was 34 offers, and we wrote well over asking and even removed some contingencies. So, the offers are very strong, but there's still like 34 offers on a home that would get no more than 5 or 8, maybe, on a very strong market. So it's insane.
Yeah. And there are certain segments of the market that are heated like that. You get above 1.5 million. It's a little bit less than that, but in the regular, I had a client this week that wrote an offer and there was 8 offers on the property competing. And then the last statistics I'll share, and then I'll let you guys get to work on kind of sharing some data that you have. So this is kind of curious. People always ask us, the high end, so something over 2 million, how is that market compared to where we were, say, a year ago? And so we are dramatically better today. So the high end is even doing much better than what it had. So a year ago, there were 385 houses in 2019 that sold over 2 million in our market, which that's even a pretty big number compared to what we're used to. This year so far, we've had 532 houses selling over 2 million in our.
Wow.
So it's just a curious time. There's a lot of money coming into the South Bay. A lot of the tech companies, buyers are flocking to us from that area and from the city, and coming to our area with pretty big wherewithal. And one of the reasons why I wanted to share that data is I had a client ask me recently. She said, "Yeah, the low end is hot, but what about the homes that are selling, 3 million? What about that?" So, so that's awesome. So overall, the East Bay very strong. And so Ryan, I know you're going to share something about the central, the 680 area.
Yeah. So I have 4 cities to kind of report on. We have San Ramon and Danville, and then Dublin and Pleasanton in Alameda County, but still part of the East Bay, like you said. San Ramon, we are experiencing 59 active homes and 115 pending. So there's a huge separation with active and pending. Of course, that's supply and demand, like you mentioned. Just for a little bit of a comparison, in 2019, from January 1st to November 21st, they were 913 closed homes. In 2020, even during pretty much a 2-month shutdown in the pandemic, we have 860 as of today from January 1st of 2020. Danville, similar situation, 83 active homes and 115 pending as well. Danville last year had 762 homes that closed. This year, we have 713. So very, very similar. Going over to Dublin, we have 50 active homes and 107 pending. So again, just like San Ramon, Danville, and the whole Bay Area. Last year in Dublin, there were 829 closed homes. This year, there's 982. So there's almost 100 more homes, closed during a pandemic that has shut us down for about 2 months. That's incredible.
That means for 2 months, there was hardly anything that could be sold. So yes.
Yep. So imagine what it would be if we had March and April to, show homes and to complete transactions. Pleasanton, the last city here, 53 active homes and 93 pending. Last year in Pleasanton, there was 801 closed homes. This year we have 746. So all 4 cities are showing very, very strong markets, and that is, demanding the buyers to, have their best strategy in place, and that's what we're helping them with.
Yeah, exactly. That's it's amazing.
Yeah. So I looked at a couple cities here. So I focused on Concord, Walnut Creek, Martinez, Pleasant Hill. So today, as far as active, we have 387 with all those cities combined, and then pending is 451. So definitely seeing, and then we're seeing multiple offers, as low as 3 offers on a property, as high as 15, or like how you guys just mentioned on your side, up to 34 offers.
Yeah.
And looking at closed, this year versus last year in 2019, there's been over 3,400 closed. And then actually this year, it's about the same. So even though we were on shutdown, we still have about the same amount of homes that actually closed in this area.
Yeah, it's interesting. It's, I think across the board, all the cities in our market, I remember last year when we did this update, a few of our areas actually were softer. Like there were much more inventory than what they were pending, but across the board, there's more on the market pending. So people are more demand than supply in all the cities. So, strong. But really what this tells us is, you know, we're anticipating that 2021, we don't have a crystal ball. And of course, all we can do is based on kind of gut instinct and past experience and what we're watching in the market today. It sure feels like the market's going to continue to stay active next year, at least in our East Bay. I think we're going to continue to see this high demand. And, you know, we're so happy to help anyone prepare. You know, buyers need to be prepared. This is one of the things that I would say is the best advice we can give a buyer is, you know, go into this really prepared. Go into this with all of your ducks in a row. You know, get all of your financing lined up, get all of your, you know, just all of your questions answered, get your loan and process prepared and ready so that when you do find the home that you love, you can come in as strong as possible. You know, it helps you to get your offer accepted much more easily.
Yeah. I mean, homes are coming on the market on a Thursday, and then there's multiple offers by Sunday night. So you don't have too long, you know, and sometimes you can't even get in to see it. You know, we schedule appointments well in advance for our clients, so that never really happens. But sometimes the market is so busy and that house is so busy that all the appointments are booked up already. So you really want to have that plan in place with not only your lender and your realtor and everyone in that important decision-making process.
Yeah, and this gives even the last little bit of advice. We have a lot of questions from families that want to sell a home and buy a home, right? That's pretty common in our area, either downsizing or buying something bigger, is make sure that you're prepared, because even though you have a beautiful home that will sell quickly, you still have to be in a position when you're writing an offer to be super clean. So that's something that we call, you know, the three of us are, you know, very good at helping our sellers prepare for the purchase process, you know, get your home underway. And we do have some strategies on helping you sell your home in a way that makes you not feel pressured when it comes to the buy, meaning that you get extra time to, you know, then search for a home once you are sold. So, you know, we're happy. Exactly. Well, thank you all for, you know, for attending our East Bay Comps and Coffee. This is a weekly.
Thank you.
Yeah, thanks for watching, everyone. And if you guys have questions, shoot us a question. We're happy to answer. This will be for anyone that needs information. And over the next couple of weeks, we are working on having someone from the school board attending our Comps and Coffee, because we've had so many questions from families that are moving into our area, from families that live here. What's going on with schools? You know, what can we anticipate with openings and all that? So we're going to answer some of those questions coming up soon. So you guys tune in, call us if you have questions. Have a wonderful, happy Thanksgiving. Stay well.
Great.
Take
Have
care.
a good weekend, everyone.
Take care.